Hi everyone. Today let's see what Ray Dalio has to say with his bubble indicator.
Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started.
So Ray Dalio's bubble indicator says the Mag 7 is definitely frothy, but it's not as frothy as some of the other bubbles that we've seen. And you can see here all of the Mag 7, and they are currently sitting at the 73rd percentile relative to history. So they are definitely frothy, like I mentioned, definitely pretty expensive. And can they keep up this massive level of growth and maintain this expense ratio that they're currently sitting at? It does seem hard to believe that they can stay that extended for so long. And are these businesses effectively investing in their future to maintain growth and these high multiples? It does seem hard to believe, but the other main point here is that the rest of the market really is not that expensive. It's currently sitting at that 52nd percentile or so. So historically, overall, we are not in a bubble. And you can see that 52nd percentile here. But it just means that we need to start to buy up the rest of the markets. And really, I think that's why we've seen markets hold up so well over the past couple of weeks. The Mag 7 has been choppy, not growing a whole lot, but markets have held up well even with that weakness. And I think that's the broader market starting to catch up. And we have seen that across the breadth indicators as well. So pretty interesting to see, and it's good to see some statistics on that 72nd percentile versus that 52nd percentile. So definitely some expensive parts of the market, but still some value out there. Moving over to the indicator, starting off with fear and greed, you can see we're at a 70. Previous close was a 72, so we did step down a little bit. Markets were pretty weak on the Friday session. Momentum, strength, and breadth all on extreme greed, so they haven't really moved at all, even with the most recent down moves. Put call ratio, regular greed. Volatility, still neutral, but you can see we continue to bounce off of that 50-day moving average, and we did bounce here again on the Friday session. And then we have safe haven demand still in regular greed, and junk bonds still in extreme greed, so still lots of bullishness across markets. And to me, this is a little bit weak considering the fact that we did see some breakdowns in structure and we're still seeing greed in markets. Moving over to the AAII survey, you can see the bulls did step down pretty substantially, and all of those flowed here into the neutral zone. Bearish, basically flat, so definitely interesting. Makes sense considering that we've seen markets either move sideways or down a little bit, but we had peak bullishness last week relative to what we've been seeing, and now we're seeing some pullbacks, which could be the start of a bigger down move, and we'll take a look at that on the charts as well. Moving over to seasonality here, you can see the 15th was expected to be the low point of the month, so we should see some sideways chop. I'm a little bit concerned about that considering the moves that we saw, and we'll see that on the charts like I mentioned, but understand seasonality-wise, that was supposed to be the low point of the month, and we could see a bit of a rally on Monday and sideways chop into the rest of the month. And then looking at the calendar here, you can see that same statistics. Monday, Tuesday expected to be quite bullish. Wednesday, Thursday, nothing on the calendar. And then the Friday, pretty bullish. And then the rest of the month, basically nothing statistically. And then Friday is closed the week after this one. Moving over to the economic calendar, you can see nothing here for Monday, just CPI for the Eurozone. Shouldn't affect us too much. It is expected to step down pretty substantially there on the headline number. Core expected to step down quite well as also. And I do think that would be good for US markets considering the inflation numbers we've been seeing. And then looking at Tuesday, really nothing on the calendar here. And then moving over to Wednesday, this is the big one for the week. We do have the FOMC statement. I don't think they're going to change rates. It's expected to be flat, but that could definitely present some volatility in markets. And then looking at Thursday, we do have quite a bit of economic data here as well. So you have Philly Fed manufacturing, global US manufacturing PMI, composite PMI, some economic indicators to see where markets could go, and then existing home sales. That has been interesting recently also. And then Fed balance sheet, which did tick up over the last week. We'll see if that continues this week. And then on Friday, you actually have Fed Powell speaking on 9 o'clock. I wouldn't expect him to say anything there that he did not say in the statement, but sometimes he does say some weird things. And then for the rest of the week, there is basically nothing. Moving over to Max Payne, it is all hedges in the market. Pretty interesting. You can see the put call ratio is still pretty high around that 2 mark. But look at all these calls, 515, 520, 525, and 530. It seems like the market is betting on some bearishness, and there's no support until around 506, and it's not anywhere near as many calls as there are even on this first strike between these first 2 strikes here to the put side at 502 and 506. So pretty interesting. Looks significantly more bearish, and remember, we did finish at the lows of the calls, a bearish finish last week. And if we did get a finish like that, that would be around 502 or a little bit less than than 2% to the downside, so keep that in mind for the Friday finish. Moving over to the charts, starting off with the S&Ps here on the monthly chart. You can see the month is actually only up 0.4% at this point, considering what we gave back on the last week. It's also worth noting, look how little volume there was on that candle. Momentum still bullish, so everything still looks okay on the monthly chart, and we are still above the trend, which is around that 5,000 level on the SPX. But jumping down to the weekly chart, you can see we've actually had 2 weeks in a row of bearishness on the SPY, 0.26 and 0.13 to the downside. Momentum rolling down here. That is a very bearish indicator. If this has followed through, you can see we've had a move here with a step down at the end of July, and that followed through all the way here until the October low. And then that started the rally that we saw here most recently. And that really culminated around that 55 EMA, which is currently trading around 44.65. So if we did see a move like that over the next few months, it would not be out of the realm of possibility to see the SPX come back into that 4,600 area, which would be several hundred points lower, obviously. And then you can see volume stepping up over the last 2 weeks, which again is not super bullish on those 2 bearish weeks at all-time highs. We're still holding this trend line, and we did close above it. But next week, I would expect that to break down, and then you have the 9 EMA right around that 5,000 level, 5,020 to be exact, which did make sense with the max pain numbers that we saw. Moving over to the SPY here on the daily chart, I just wanted to highlight, you can see this short-term trend we've been in, and we did actually close below that here on the Friday session for the first time since this rally has begun. You can see we broke into this channel here in November, right at the beginning. We've been in that channel for a while. It's been fading a little bit. We were in this upper range, held the lower range all the way up until this most recent Friday. Momentum bearish, RSI bearish, definitely does not look good. 21 EMA still sitting at 508, so you could absolutely see maybe a double top, push back into that 516 area, retest the trend line in that same zone, and then you see the bigger breakdown over the next coming weeks or potentially months even. But this is a big development. This could be the start of a bigger move down, in my opinion. Moving over to the Tasty charts here on the weekly chart, you can see those 2 bearish weeks. We are right at that third ATR band. We overthrew it all the way back on the 22 January week, and now we are pulling back to that level. 8 EMA sitting at 501.96 on the weekly chart. That is at least the first price target in my opinion, and you can actually see a step up on volume in that selling price action on the last week. You can see the volume weighted MACD breaking down also. And then looking at the daily chart, it doesn't look that much different, and you can see we're right at the midline. We've tested that midline before, nothing crazy. And then that ATR stop sitting around that 499.50 level. But the bigger thing here is those big volume bars on those last 2 selling candles, indicating that this could be set to move lower pretty soon. Moving over to the NASDAQ here on the weekly chart, again, 2 bearish weeks in a row, 1.17 to the downside, momentum stepping down, RSI stepping down. Looks super bearish here, sitting right on top of that 9 EMA at 17,788. We did close above it, but not by much, and if that breaks, you have the 21 EMA sitting at 16,700, so a full 1,000 points or so lower in this trend until we find some support. And you can see the trend here also sitting in that same area. This looks pretty bearish going into the FOMC week, and it does seem possible that we could see a big dip following that presser, especially with the hotter than expected inflation data. Moving over to the daily chart, you can see very similar thesis. Broke that on the Thursday session, gapped down and fell on the Friday session. 55 EMA sitting at 425.41. It does look like this is set to go quite a bit lower over the next coming days. We have seen dips below this before. You can see we did get below this trend line here in January, as well as here on that 21 February day. And then we ended up pushing right back to the middle of that channel. So if that does happen again, that would give you a price target of around 454. I would say this looks quite a bit more bearish than these previous indicators, considering the big selling that we saw on 8 March as well as 15 March. Moving over to the Tasty charts on the weekly, you can see those 2 bearish weeks sitting right on top of that 8 EMA at 431.92. We did overthrow that third ATR band a couple of times, and now we've broken back below it. 21 EMA on this chart sitting at 412.61, just above that mid-range, which is at 408.36. You can see we overthrew that mid-range here in that July move all the way down to the ATR stop, which is currently trading around 397.68 or so. And then looking at the volume profile here, you can see big selling on those most recent weeks. And then looking at the days, again, big selling here recently. The two biggest days of this month were big selling, RVOL of around 2.5, big selling candle. And again, here on the Friday session, big selling candle, bearish momentum on the volume weighted MACD. And then you have the ATR stop sitting in that 427.60 area. Moving over to the Russell here on the weekly chart, you can see it was down 2.14%, pretty bearish. You can see momentum bearish, RSI breaking down. Big wick rejection the previous week, big down week this week. Got the 9-week moving average at 199.87. Need that level to hold here, and then I have a level here we're at 198.75. Super important. It's still above my 201.88 level, so that's another one, but very important zone right here, and that is right at the highs from July as well. So if this zone does not hold, could be much lower lows to come. And you can see we had a similar move like that, couple of down weeks, retest, bigger breakdown, and that was a very substantial move all the way down to the 164. So super critical over the next couple of weeks on the Russell. And looking at it here on the daily chart, you can see that break of structure, broke the 21, broke the 9, 55 EMA at 198.64. Again, super important zone, momentum bearish, RSI bearish, and everything on the Russell does look quite weak. Moving over to the tasty charts for the Russell, you can see all those levels still breaking. You have the 34 EMA at 102.09, and then the ATR stop here around that 197.34 level. And you can see the steps up on volume as we saw that selling starting to accelerate. Definitely not what you would want to see. We'll see if we can get a little bit of a pop on this move, maybe a double top or a slightly lower high. We'll see how that plays out, but right now this looks bearish. Momentum's also bearish there on the volume weighted MACD. Moving over to the Dow on the weekly, down 0.26%. Momentum definitely accelerating to the downside. It's been fading for a while, but the last 2 weeks have been quite bearish. Broke below that 387.77 level on a closing basis. Got VWAP here at 382.09, and then the 21 EMA sitting all the way down at 370.84. So big bearish move potentially. And looking at that on the daily chart, you can see we broke all of the structures. 55 EMA sitting at 383.34. Have a level there, 382.20. If that area breaks, you can see there is a lot of downside potential. So bearish momentum, bearish RSI, volume strong on those 2 down days, and it does seem like there is more selling to come. Moving over to the equal weighted S&Ps, you can see that we were also down here 0.66%. Momentum stepping down. You can see divergence in the momentum, not great either. RSI breaking out of overbought conditions with the SMA sitting down at 66.46. You can see we are double topping at that all-time high here for the equal weights. 9 EMA sitting at 160.70, right around my level here at 160.34. You can see a bunch of wick rejections at that level. If we get another move like this where we touch it, pull back, retest, 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 we could see lower lows to come. So keep that in mind. Definitely interesting at a very critical level. Moving over to the ratios, starting off with the SPY Russell and NASDAQ SPY, you can see the SPY Russell definitely moved higher. We had been seeing a little bit of Russell outperformance, but SPY did very well here today, and you can see momentum on both of these charts is a little bit bearish, but definitely weaker here on the NASDAQ SPY. NASDAQ pulling back very powerfully. Next level here of 343, right at the trend line as well, and the 55 EMA sitting at 340 as well. So seems like the NASDAQ is set to underperform for a few weeks. We'll see how that plays out. And then SPY Russell consolidating here at resistance, but right now it seems like the SPY is set to outperform. Moving over to the SPY divided by the M2 money supply, you can see those 2 bearish weeks right at a critical level, 24.49. We'll see if that level breaks down to 24.07 at the 9 EMA. I also have some trend support there. Momentum rolling over. You can see just how overbought we are. Super overbought on this chart. Looks like we're set to roll over a little bit. In terms of structure, nothing has really changed, but definitely showing a little bit of weakness at a critical zone. In terms of structure, nothing has really changed. And if this does break down here, I would expect it to pull back potentially into these most recent highs around that 22.05 level. Moving over to the Mag 7 here on the weekly chart, you can see we did have a very strong topping tail 2 weeks ago, and then last week we were bearish on the week, 0.55. Right at the trend line, you can see the short-term trend still within that 9 EMA sitting at 328.97 on the weekly chart. You can see momentum has stepped down for 2 weeks in a row. Definitely overbought. Everything here says this could be a bit of a topping pattern, and we've seen some consolidation at this level we got here at the beginning of March, and we are basically flat from that level, if not down a little bit. Momentum bearish, RSI breaking down. You can see that volume ramping on that selling. So definitely starting to show weakness. In terms of structure, it has not broken yet. You got the trend line sitting right on the 21 EMA at 342.33, but it does seem weak. Moving over to Apple and Tesla, you can see both of these have been quite weak. Apple actually did much better on the week at 1.11 to the upside. You can see that 170.90 level is critical at this point, in my opinion. Inside candle on the weekly chart, and you can see the volume basically flat across those 3 weeks. And I do want to highlight here on the daily chart, look at that big volume spike. After we gapped higher, dojied, touched the level, and then rallying here, in my opinion. And I think this is going to be a higher low, and I think Apple has some room to the upside, which is interesting considering the other weakness that we've talked about. Tesla, on the other hand, this looks like a dumpster fire. Fell, bear flag, falling some more. Current price target down around 125, but next support for me, 152.43. And then you can see momentum and RSI both bearish there as well. Moving over to Meta and NVIDIA, you can see Meta was down 4.32%. Momentum has stepped down pretty significantly. RSI breaking below the SMA. Volume stepping up on those down moves. It does seem like Meta has some downside potential, at least down to VWAP, in my opinion, down around 433.85. We'll see if that level comes through. A couple of weeks in downside, I think. Next level of support for me, 454.07. And then you can see NVIDIA was only up 0.35%, which is basically down for a company like this. And you can see we got that first step towards bearish momentum on NVIDIA for a long time. Last time we saw that was 20 June, and we saw a sideways chop all the way here until 30 October, and then we started to break that range. And actually, we still retested the 21 before having this most recent run. Got a big wick rejection from that upper trend line. It does seem like the NVIDIA magic is starting to wear off a little bit, and you can see that similar price action from the NASDAQ. Massive gap higher, sold off all of that and then some on massive volume. And you can see bearish momentum here on the daily chart as well, with the 21 EMA sitting at 819.45. Moving over to Microsoft and Amazon on the daily charts, I just want to highlight the massive volume spikes you can see on both of these Friday sessions. Big selling, big volume spikes relative to what we had been seeing. And you can see one here on Microsoft as well on 31 January. Gapped lower through a big wick, big selling, ended up hanging in there for a while, and then we got big selling again in the similar region to that previous high. And then Amazon, big selling again here at the level 174.23. If that breaks, there is quite a bit of downside in my opinion. Moving over to sectors here on the weekly chart, starting off with staples and discretionaries, you can see the rotation into safer stocks continues. Staples up 0.49%, discretionaries down 1.25%, and that's the second week of bearishness in a row, 2.55% and 1.25%, right at VWAP. 21 EMA sitting down at 173.45, whereas you have staples closing above the level for the first time on the weekly chart, 75.40, and then your next level, 77.50. This has been quite a consistent run here from mid-October into current levels. Obviously, it was definitely oversold here, getting all the way down to 65.24. Now we've retraced all of that move, getting back here to the highs of mid-July, and then it does seem like it has a little bit more room, in my opinion, to 77.50, whereas discretionaries, momentum bearish, RSI bearish, everything looks weak here, and I would expect 174.76 to get tested. Moving over to oil and gas and energy, both of these have been on colossal runs for a few weeks now, 3.76% and 3.84% on this most recent week. Oil is on a bull run, and it makes sense why these stocks are running as well. You can see both of them breaking out. 92.82 is the next level on energy, and then 154.13 here on oil and gas. Moving over to breadth, we did get a lower high on both of these charts. You can see the 20-day average breaking down massive, momentum bearish, RSI bearish. I would expect this to break down at least to that 36.60 area. We'll see if that level breaks. The next level would, for me, would be 16. So 20-day breadth, very weak. 50-day breadth, not as weak, but still bearish, still at a critical level, 68.75, and you can see clear lower high, momentum surging back to the bear side. Clear test of that SMA here on RSI, breaking lower. That is a big bearish indicator for me. It does seem like markets are set to go lower. Moving over to 200-day breadth, we did get a bearish candle here as well, 1.5% to the downside, and you can see we did break back below 74.04 after testing it, so we had our wicks pulled back, retesting that level, clear double top in my opinion, starting to break down, momentum breaking back down. RSI hasn't broken yet. You can see multiple tops at this very important level. If we get more follow through next week, I would expect this to break down for a while. And you can see last time we tested this area and then broke down, that was the fall that we saw here from July all the way until October. So it can be long lasting, even if it's relatively shallow. So keep that in mind as we push into the next several weeks. Moving over to yields, I'd continue to talk about this. I just want to highlight the fact that yields are running into the FOMC meeting. I don't think they're going to say anything about hikes necessarily, but you can see the 2-year has priced in that we are currently only going to see 3 cuts over the next 2 years, and I do think that's quite reasonable with what we've seen relative to inflation. We'll take a look at the Fed futures in the Monday video, but right now yields are set to go higher. They've been very powerful over the last week, and that's been bearish for equities. Moving over to the dollar here on the weekly chart, you can see we had a big bearish week 2 weeks ago, bullish week this week, 0.69%, and it looks like right now we're kind of in this wedging pattern. The low, higher low, which is actually both higher than this previous low here in July, and then you have a high, lower high. See, we're coming off of that support area. See if we can break out here. It does seem possible that that could happen with yields going higher, so keeping an eye on the dollar, looking for a potential break, and that could get all the way up to 505 in my opinion if we establish a higher high. Moving over to bonds, you can see TLT doing nothing. It was bearish on the week, 0.36, but it's been in the same range. Momentum bearish for the first time here on the weekly chart. RSI not doing much of anything, and then you can see TLT big breakdown on the week, 2.91%. Momentum bearish. Critical level 92.82, super important in my opinion, and I think this is probably going to break down probably into that 89.16 area, especially with what we're seeing on yields, and then going into the FOMC meeting. Moving over to the VIX here on the weekly chart, you can see we gapped higher, ended up slightly bearish on the week, 2.1%, but momentum still bullish, RSI still bullish. We're still holding higher lows, and I do think that this could go higher, but it'll be interesting to see how that plays out. I still like that 17.25 area as the next high, and I do think we'll probably see that next week. And then 18.5, super interesting level just behind it, and it wouldn't shock me if we did get into that range. Moving over to my accounts, you can see I was down quite a bit on the week, about $700, which was pretty disappointing for me. I usually try to fall a little bit less than 0.5%. Half of what the NASDAQ fell. The NASDAQ was down about 1.16%, and I fell 0.7%, so a little bit more than half, which, like I said, is a little bit disappointing, but overall not terrible considering how much the NASDAQ was down over the last 2 weeks. And then you can see current positions, IWM still neutral here, holding an at the money call at 124 for the Monday session. A little bit in the money actually, 202. You can see it was a little bit in the money here. It was down a little bit after hours. So see how that plays out. Trying to collect about another $100 there. And then the Qs, I sold some 432 puts. I've been playing the covered call game, which had been working pretty well through the year so far, but I'm trying to get on the put game a little bit more to give myself some protection to the downside. I think markets are going to show some weakness, and if they start to fall pretty aggressive, I'm probably going to sell some calls against these puts, and then we'll see how it plays out from there. And then on the poor man's covered call, again, still making a little bit of money there somehow, continuing to collect credits on the daily calls, 434 for $1.84, and you can see that's basically at the money. It's a little bit in the money right now, but like I said, I am bearish in my bias, so I'm trying to be a little bit more conservative here on these bullish positions. Let me know down in the comment section what you think of Ray Dalio and his bubble indicator. Can markets continue to go higher, or are we priced in with all of the growth potential that's coming over the next several months? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.